Hello, this is iKargos. As of June 2024, sea freight rates are skyrocketing. Many people involved in the global supply chain must be feeling the impact. Today, I'd like to explain why sea freight rates are soaring at the moment. First, let's look back at the freight trends of 2023. The sea freight rates from Shanghai to North America in 2023 experienced a significant drop at the beginning of the year. Specifically, SCFI, the Shanghai Containerized Freight Index, fell to 1,006 points at the beginning of February 2023, a sharp decline from the average of 3,410 points in 2022. During this period, the freight rate per 40-foot container also dropped from $10,400 in September 2021 to $2,030. Afterwards, continued low demand and oversupply kept rates depressed. For most of 2023, the freight rates remained at low levels. This was due to the continuous influx of new ships ordered during the COVID-19 pandemic, leading to an oversupply. The introduction of ultra-large container ships exceeding 20,000 TEU aggravated oversupply on major routes between Asia-Europe and Asia-North America. As a result, shipping companies were forced to lower sea freight rates, decreasing overall market rates. Additionally, the port congestion and supply chain disruptions seen at the beginning of the pandemic were gradually resolved by 2023. Port operators and logistics companies implemented various measures to improve efficiency and reduced congestion. This led to shorter transport times and stabilized rates. However, towards the end of 2023, freight rates began to rise again. One of the causes was the attacks on commercial vessels by the Houthi armed group in Yemen. This forced ships to avoid the Red Sea and take a detour via the Cape of Good Hope in South Africa. The Houthis, linked to the Israel-Palestine conflict, targeted countries supporting Israel and their economic activities. Although these attacks directly targeted Israeli commercial vessels or those connected to Israel, they had widespread effects, making other commercial ships targets as well. With ships taking the detour via the Cape of Good Hope, the operating distance increased significantly. This resulted in higher fuel consumption and extended operating time by over 2 weeks. Consequently, operating costs rose, leading to higher ocean freight rates. Furthermore, the detour reduced the turnover rate of containers, exacerbating container shortages at major export ports in Asia. Especially for exports from China, container shortages have been reported, further driving up freight rates. Let's also consider the economic aspects. Since 2023, economic growth in Western countries has been recovering, particularly with increased consumption in North America and Europe. Furthermore, in addition to a surge in export demand, many companies that had been concerned about their supply chains in the wake of the COVID-19 pandemic over-ordered in fear of future supply shortages, which also contributed to higher freight rates. The U.S. Federal Reserve is looking for the right time to cut interest rates to curb inflation pressures, but the U.S. economy remains strong and demand is robust. Typically, July, August, and September are considered peak seasons for North American transport, and high transport demand is expected to continue until early October, before China's National Day. So how long will this surge in sea freight rates last? It's hard to say due to the complex interplay of various factors. Some predict that the supply-demand balance will stabilize in the latter half of 2024 as more new ships are introduced into the market. However, labor negotiations are scheduled on the U.S. East Coast in October 2024. Although not as severe as on the West Coast, terminal disruptions are expected. Once container shortages and supply chain disruptions occur, they do not resolve quickly. It takes at least several months, and meanwhile, the North American Christmas shopping season will arrive, making it uncertain whether ocean freight rates will decrease in response to high demand. How was this explanation? As I have explained, in 2024, factors such as geopolitical risks leading to route changes, increased demand due to global economic growth, rising operational costs, and space constraints are driving up freight rates. Especially the attacks on commercial vessels in the Red Sea by the Houthis, stemming from the Israel-Palestine conflict, are a significant factor. Considering these factors comprehensively, sea freight rate trends remain unstable, and future rates will likely be heavily influenced by market conditions and geopolitical developments. It is expected that stabilizing freight rates will take time, and companies need to continue implementing flexible measures. The current surge in sea freight rates due to supply chain disruptions is caused by these factors. That's all for this issue. Thank you very much. In this channel, I explain about international logistics knowledge for your better understanding. I hope this video will be a good support for your logistics job. Thank you. See you next time with more such videos.